Welcome to today's market report.
European stock markets traded higher on Wednesday on optimism that the global vaccination program will lead to prompt economic recovery, while attention turns to the annual UK budget statement. DAX in Germany traded 0.9% higher, CAC 40 rose 0.8%, FTSE index climbed 1.2%. Europe has been hit very hard by the COVID-19 pandemic. However, confidence is growing that the second half of the year will see strong growth as the region's economies reopen, even if many European countries have been slow in implementing their vaccination programs. The European Union aims to increase the region's vaccine production capacity to 2 to 3 billion doses per year by the end of 2021. Industry Commissioner Thierry Breton was quoted as saying in the Italian press on Wednesday, Britain has suffered the biggest death toll in Europe, and the restriction measures put in place to combat the virus resulted in the mainly services-based economy shrinking by 10% last year, its worst slump in 3 centuries. Against this backdrop, Finance Minister Rishi Sunak has been tasked with steering the country through what the government has said will be the final stages of these restrictions, while avoiding any further damage to battered public finances. He will announce his plans on how to do this in a budgetary statement later Wednesday. China's services sector activity grew at its slowest pace in 10 months in February, following another COVID outbreak at the start of the year. This is also partially due to the Chinese New Year celebration in the month. India's services sector, however, grew at its fastest in a year. February services PMI data for much of Europe are expected later in the session, and are also expected to suffer a step backwards given the restrictions currently in place throughout the continent. In corporate news, Stellantis stock rose 2% after the automaker formed in January through the merger of Fiat, Chrysler and PSA Group said it's aiming for a profit margin of 5.5% to 7.5% this year. British insurer Hiscox stock slumped over 12% as it posted a huge loss for 2020 and continued to withhold its dividend. Oil prices edged higher on Wednesday, shrugging off a sharp rise in US inventories amid cautious optimism about returning demand as global vaccination programs ramp up. The crude futures traded 0.2% higher at $59.84 per barrel. Brent contract rose 0.1% to $62.78 per barrel. Gold futures fell 0.4% to $1,726.45 per ounce. On the FX front, GBP/USD stays sluggish as taking rounds to the 139.50 to 139.65 trading range, currently around 139.60, while heading into the London opening on Wednesday. The pair portrays the typical cautious sentiment ahead of the key event, i.e. the British annual budget, while also respecting the broad US dollar weakness and risk-on mood. While the Chancellor of the Exchequer has already signalled readiness to do whatever it takes, traders would seek clues from the annual budget as to how the present freebies will be curtailed in the future to determine immediate GBP/USD moves. GBP could edge below last week's low at 138.90 in view of the lacklustre momentum. Any further decline is unlikely to threaten the major support at 138.50. The rebound has scope to extend, but any further advance is likely limited to a test of 139.95. The next resistance at 140.35 is unlikely to come into the picture. Support is at 139.25, followed by 138.90. Eurodollar has been recovering amid temporary market calm, but expected strong US figures, stimulus progress, and America's vaccine ramp-up are set to boost the greenback. Economists expect the ISM Services Purchasing Managers Index to print 58.7 points in February, prolonged growth in America's largest sector. The Manufacturing PMI smashed estimates earlier in the week with 60.8. ADP's employment figures are forecast to show an increase of 177,000 private sector jobs. Eurodollar continues suffering from the downside momentum on the 4-hour chart and trades below the 50, 100 and 200 simple moving averages, which are all converging around the 121.10 level. The dollar index slipped to 90.971, just below 1 month high.
This is today's market news. Thanks for listening. We'll see you next time.